What's up everybody, Tom here with another video. In today's video, we'll be talking about everything to do with the SP 500, Nasdaq, Apple, Bitcoin, Tesla, and more ahead of non-farm payrolls, one of the biggest jobs reports that we've seen in some time. We also will be talking about stock market pullbacks and whether we're still currently in one, and of course, how many you expect per year. Here's a great chart showing you the average over time of 5% plus pullbacks, and guess what? We're actually a little bit below schedule so far. Okay guys, well here begins our market recap for the markets closed 7th of October 2021, and you'll notice it was mostly a green session. We gapped up higher, rallied for a little bit of the day, and then pulled straight back down to where we ended up doing the gap. Overall, I would say that it was pretty lackluster in terms of any particular stock going well. At a time there, it looked like Tesla would break the magical 800, and we'll talk about that soon, but it failed to do so. Notice the buying in the session morning, then the slow sell-off into the close. And the key here is the sell-off into the close. We're going into non-farm payrolls, the jobs report, one of the biggest bits of information for the month, and it makes sense exactly where Wall Street ended the S&P, and we'll take a look at that in just a few moments. Every one of the sectors, again, same thing, rallied at the beginning, sold off near the end. We had the strongest section of the day was XLY, and then we had XLF, surprisingly, actually in the middle here, considering the 10-year yield, which is probably the biggest X factor that we're seeing in the markets over the last 24 hours. Without further ado, let's talk about the options and of course the technical analysis for the SPY and the S&P 500, and let's look at some scenarios here for what we believe could occur. So the market did gap up, as we saw. This is the gap up. This is the movement towards that previous kind of support area that we saw. We filled it. Previous support becomes resistance. It sold off and it finished up exactly where you expect it to finish up. We basically finished at the trend line. So look at this rejection into the end of the day. A relative bearish looking candle, if you don't say so myself. Look at this. This is a pin bar or a shooting star style rejection. Where is it occurring? It's occurring around the 20 and the 50 exponential moving average. And what it seems more likely than not to do now is the market will probably try to move to fill that gap, and then we'll find out whether the bulls and the bears can scrap it out. And why I like a pin bar like this is because it gives us a really good sense of what Wall Street's going to want to do. Close above the pin bar, we've taken out all the shorters, the bulls are fully in control, we move towards 445, and of course put in that giant double bottom towards all-time highs. Move towards the gap here, buyers will try to come back in on a very important level, and I think the SPX probably details this the most, so let's use that chart. And we'll notice here that previous resistance around that 43.75 becomes an area of support. We've got a 20.50 on the 2 hour. This is where the buyers are going to try to pick it back up. And this is where the battle, I think, could happen during the non-farm payrolls result. Whatever the result may be, filling a gap is pretty important to markets. A lot of people try to get these gap trades. And if we do pull back to this zone, this is going to be where the battle between the bulls and the bears end up. If they close it back underneath and we get back into the top of the channel, this was a bull trap, no doubt about it. There's the trend line on the way down. As you saw in the daily, it did close underneath the trend line. We get back underneath this level. Next stop, 4,300. Under 4,300, we know the next area, most likely 4,200. So this all plays into the idea that we're still at a very pivotal point. We're still at that last kind of key area for the bears. And if the bears literally lose this session, I'm going to probably have to go with bull, 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 because if you end up failing and you push back above this area here, this 44.33, at that point, what stops the bulls from getting full control of the market? What, this little high over here? Unlikely. If you go back through history, it's unlikely any of these kind of levels really stop it. So it's such an important zone, and we'll keep watching it. Now let's go over to the option strike. So we always talk about put and call walls. We've discussed for some time that we believe before the 15th of October, that third week expiry, that there's so many calls sitting around the 450 on the SPY that it would be hard pressed for Wall Street to push above there. There's still a huge amount of open interest, and we can see where the puts are for the week ahead next week. But when we move over to the actual expiry for the Friday session, you'll notice we have the 420 put wall. So this is the 420 put wall. Then we have the 440 call wall. And in between there is kind of like the happy place for the closure. In fact, I think the perfect maximum pain area, well, in fact, let's look at it together now, is going to be 434 at maturity. So if we go back over to the SPY for a second, where are we now? 438. Where would the perfect area for closure be? 434. Where's 434? The full gap fill. Whoa, mind blown. No, not really, but you see what I'm getting at. This is the type of thing. If you had maximum pain theory in your mind, you were thinking about what's the perfect scenario for Wall Street, it's actually to close it right here, to move it back down, close it at that zone. Will that happen? Hey, we don't know, but we can put together some stats. We can put together the idea of a gap fill. And of course, it's all going to come down to the jobs numbers, the non-farm payrolls. This is the way, though, that you want to start interpreting the charts, and you want to understand what is in the best interests of the big traders. And when we get the best interests of them in mind, we follow what they do rather than following what the retail herd does. That's one of the most important things that I had to learn about the markets. Following the big guys is actually the best thing to do. Let's move over to Tesla now before we go over our Nasdaq, Bitcoin, and Apple information. And Tesla's still all about the 800. We went for the rally there near the close. It rallied up, got above 800, rejected it again. And all this really points to is how important that 800 closure will be. 20 moving average on the daily still should act as some kind of support. That 762 ideally finds buyers if we do end up getting down there. And why we say the 800 is so important, if we scroll it out, take a look at this, $800, we get past, maybe 820 is a little bit of an issue, but overall, it seems that the stats and the participation phase, I believe the height will be insane for Tesla should it get through here. It just makes logical sense to go for that next range, that 880, and I'm sure many traders will be watching that. When we move over to the put and call walls for the Friday expiry, why is 800 kind of finding a barrier? There is quite a lot of options sitting on that 800, and anywhere between the 760 and 800 seems to be where there's not many options being written. Huge amounts of puts. You know, this is a good sign for buyers because there's so many put walls here. Whether it's Michael Burry or somebody else, someone's got negativity on the mind when it comes to Tesla. And it's just not going to do it while we have such strong price action. And I'm surprised there's so many weakness kind of positions out there. But you know what? We're going to look at it as the contrarian. We see them as put walls. We see the price action first and foremost, and it looks quite strong and bullish. So when we take a look at Apple, we've discussed this chart quite a few times. We've discussed how important this chart is for market sentiment. So it did gap up and hold above our downward trend line. We didn't get above the 2050, which we know is our last point of bearish bullish support, and that's around that 145 area. There is a 20, there is a 50, there is previous support, and it's that perfect, beautiful 145 that everyone looks for. If we move to the 2 hour, what you'll notice is that it's gapped above, it's moved up, and similar to the stock market itself, where's the fight going to be between the buyers and the sellers? We expect it right around here, right around that 142. We expect it to pull back down, hopefully find that area. If the buyers are going to come back in, they're going to come in here. And if we go bearish and we close underneath, well, the bears can rejoice back down to 138. Theoretically, we go. And then, of course, we move potentially to the 135, 130 area. So it's still a fight here in all these particular candles, all these particular stocks. We're not out of the works yet for the bulls, but we certainly are looking better than we have looked in recent weeks. So all that bearishness is starting to come out of the markets, and this is the last time that the bears can try to push it down. Let's move over here to Apple. Take a look at the charts here. Again, huge amounts of calls expiring. We've talked about that 145 strike, that 144 strike, and a perfect area to close the market for Apple would be around that 142. That would be an absolute fantastic zone for Wall Street. That would allow most of the options to expire worthless, and they would be having the lobster lunches. As we know, that would make them very happy going into the weekend. Another pretty happy event has been US oil. It has pulled back. It got a little bit sneaky, got underneath that 77 zone, and then it's rallied incredibly hard off that zone. Another reason why, if oil starts to pick up past 80 again, that might send a little bit of shockwaves through some of the markets. Remember, this is a very important thing. If we have an increase in oil, Are we seeing some kind of increase in inflation across the board? And that will come into our 10-year discussion in just a second. But big rebound here. You'll know I'm relatively bullish here on oil. I've got my target set to around that 85.80 from a technical standpoint. And the main reason why is because when we zoom out, this is the first time we've been above this 77 for a long time. Remember, go out and have a look at the previous times this happened. We had the supports. Now we have the resistances and the supports around that 86. So this is a pretty damn big move here for oil. And it seems likely that it's going to try to ramp over the next coming weeks, and we'll continue to watch it and cover it on this channel. So if you're enjoying this content, remember to subscribe, guys. Smash that like button. It does help us out. Let's move over to the US 10 year. So this is probably the elephant in the room. We've been covering this almost every day for the last couple of weeks, and we're specifically looking at this closure here. A very significant closure breakout. It's a bit marginal, but it's gone above the previous resistances here on the left. It's gone above this resistance here just barely on the right. And when it comes down to non-farm payrolls, this thing could go ballistic. I mean, we're talking about already looking bullish ahead of non-farms. Will we go to 1.7 or 1.75? When we go up, what happens to the QQQ or the Nasdaq? It tends to shock itself, and the QQQ unfortunately goes down. So the Nasdaq will go down, or high growth will go down. And overall, it's that initial shock. I've talked about how I don't think it has long-term ramifications, but it usually has that initial problem. And a lot of people say to me, but Tom, the US 10 year went up today and the Nasdaq went up as well. Yes, it did. But remember, it's that initial shock that happens. We already had hit this level once before. The Nasdaq reacted over here. It's like the VIX. It's not going to react when it hits the same level. It will react if the 10 year goes ballistic. So just remember, we keep watching this and we'll continue to follow that 10 year. Move over to the Nasdaq, similar to the S&P. It gapped up, moved very strongly, but this one hit a very key level, 15,000. What a fantastic day trader close level there if you were long. Previous supports, previous little area here, 15,000 and a 2050 moving average resistance. It's a good level to take some market movements off. And really, again, you're looking for that gap movement down. And if you're bullish, you're looking here and looking for signs of turnaround. If you miss something like that, I mean, if it gets above 15,000 and closes, surely that's the beginning of some bullishness pressure here. I mean, this is a big rejection, or at least a decent rejection here from Wall Street into the non-farms. You close above these types of ones, you really can't ignore it. It's a pretty serious deal, and that should hopefully push higher. Again, we get underneath this previous gap closure, you're pushing back onto the trend line. And when you start pushing trend lines multiple times, you're talking about breaks, and that potential down to 14,050 or something becomes open for the Nasdaq. So bulls and bears, they both haven't lost full control yet. It's just still in the zone of fighting between them. Let's move over to the QQQ. We had that marginal closure above. We discussed yesterday, some scaling in would have been, I guess, decent idea. It moved up, hit the resistance as we discussed. Then it started selling off into the close. Again, we see the gap. The gap could be filled. If it is filled, this is where the buyers will try to come back in. It's the exact same thing. Underneath, we close, we move back down to the 352. So there's some very key zones, pivotal areas, and I think very good day trading upon us right now in these markets. Let's move over to Bitcoin. Quite a few people going crazy on crypto right now, and I don't blame them. Some great little pickups that have occurred. We've had the 20 moving average here on the 2 hour, finding some buying pressure. It kind of looks like almost a little flag here on Bitcoin right now. But I think Bitcoin is more than likely in a consolidation. And what we're going to see now is a bit of a rotation out of Bitcoin into some of the other coins. Once the king has moved, we know things like Ethereum, things like DOT, Cardano, all these types of trades start to move out. And here's the resistance here on Ethereum trying to break during the time of this recording. It's moving through that 3650, and if it does that, next stop could be as high as 4,000. We've seen that kind of rally occur before. Cardano is very similar. You've got a resistance across this 230. If we take a look at the daily closure point, there hasn't been really a closure above this 233 for some time. And what this is doing is it's creating the lightning bolt, the trough, the peak, the higher trough, the higher peak. Fantastic. It's gotten through the trend line on the way down. There's a lot of repair going on in this, and it's been a while since anyone's been hyped or talking about Cardano as much. So these coins are all starting to ramp much, much better. I want to give a quick shout out and a reminder to everybody that we have non-farm payrolls. What is this? Make sure you get an economic calendar if you don't already have one. 8:30 a.m. New York time, non-farm payrolls comes out, and we do have an expectation here of 490K jobs and obviously unemployment rate to be dropping to 5.1. In terms of interpreting this result, it's going to be a tough one. In the past, we've looked for slightly bad reports to really boost that market because, of course, that's meant the Fed may not taper or change interest rates as much. At this stage, I feel like the Fed will taper regardless. So maybe a slightly bad bit of news is actually bad for the market, or a bad bit of news is bad for the market. Again, it's just an opinion. I don't really like to interpret this. I like to look at the price action and follow what the market's telling us, because this number is very difficult to interpret yourself. It's much harder than people expect. And that's why often you get that choppiness. You get a market going like this all over the place, and then it will find the direction and end up going in that direction. Now, bit of a shout out, we will not be doing a Friday close stream. So we usually do Monday to Friday in terms of our live streams. For the next couple of weeks, we'll be doing Monday to Thursday close streams. And I want to give a massive shout out to people who've been joining the close stream. One of the best times to trade during the day. You may not think so, but it certainly is. And remember, the close is the key. Everything comes down to confirmation. And when do we get the confirmation of what Wall Street are doing? At the close. Please remember to subscribe, guys. Smash that like button if you enjoyed the video, and we will see you over the weekend for our recap on the non-farm payrolls. I'm super excited for this one. I want to see some direction. Hopefully we get it soon. Be nimble, be quick, be fast. They're the ones that we do right now. Bye for now.